G'day folks, welcome back to Pete's Investing. It's another update for platinum, copper, iron ore and crude oil. You can see there copper, iron ore and crude have risen slightly since our last update, and platinum has shifted sideways. We look at the heat map and you can see there on the top left, predominantly bullish across the monthly and the daily, but a few mixed signals on the weekly trends, and we use the CCI 150 to determine the trends of these markets on various timelines. And plus we've also got some other instruments for your reference should you wish to trade that. Now, in terms of a trading strategy, what we use is the weekly. We trade on if we're trading on the daily, we trade in the direction of the weekly trend, or if you're trading on the intraday, like the 1 hour, 2 hour, we trade in the direction of the daily trend. We enter a trade when the CCI 150 has a fresh breakout from the moving averages, and we close the trade when that CCI 150 enters the moving averages, or the price moves back into the moving averages of the price chart. So first we look at platinum on the monthly. You can see there it's broken up a very thin band of moving averages. It's broken above the moving averages, giving us a slightly bullish momentum. On the weekly, it was bullish, although it's broken back into that moving average band, giving us a neutral signal. And on the daily, it's bullish. So what I'd like to see is, if you're trading on the daily, that you would have been wise to take trades when the weekly was also bullish, like it was back there. And that coincided with the start of the year in that little period there, but also that period there. That would have been wise to take some trades during that period. However, if you're trading on the intraday, we look at the hourly chart and we use the daily here as a reference. So you only take long trades from that point on. And you can see there that coincides with these little periods back here when it breaks above the moving averages of the price chart, but also when it breaks above the moving averages of the CCI. Now, having said that, you'll notice here we had a bearish divergence, lower highs on the CCI versus higher highs on the price, and we've marked there a target area, and that's a minimum retrace area of the downfall, and the CCI fell off from there, and so did the price, and we choose that minimum area as a 38% level retrace of a Fibonacci. So if you draw a Fibonacci between that recent low to that high, that was a 38% level retrace. Now also, let me just get rid of that. There was another smaller divergence in that little period there. That's why I've marked it there as well. That broke down. So these can happen in a lot smaller time periods. These divergences can also happen on the hourly, as well as the hourly, also on the monthly, weekly and daily time frames. But at the moment, we've got no divergence to talk of. The CCI is trending in line with the price, and that's broken into the below the moving averages. So just be careful about going long, even though the daily is showing a bullish momentum. The hourly is broken below, so only take long trades when the hourly or the intraday time frame is also broken above the moving averages. These moving averages, by the way, on the price and the CCI can be found in the links below. I've got attached a video which was done recently about that. So US crude on the monthly, it's been bullish for a number of months now. On the weekly, it's been fluctuating in those periods, bullish there, bearish, and then currently a fresh breakout on the bullish side as well this week. And on the daily, it's been bullish now for a few days. So that's an opportune time to go long, considering the weekly and the daily are also bullish. And again, there's no divergence. There was a small divergence there between that double top on the price and lower highs on the CCI. That you always read those smaller ones as well. So that was a decline as well. You can see there it hit our target quite easily and fell well towards the, that was breaking around the, below the 61% level, and hit that support at 72.45. Let me just delete some of these, clean it up a bit. You can see there that was a 61%, and that's 100% down there. So it actually broke below, bounced off that support, then bounced up from there. So on the 1 hour chart, you can see there it's actually moved higher since our last update, and the daily showing bullish momentum. So we only take long trades. So you only take trades when it's above the moving averages there. That would be a nice little trade to take. Another one there. That would have been, if you entered that, that would have been a small loss if you're using a stop loss, or if you had waited and it bounced up again, that would have been a bit of a risk, but it would have been another entry at that point there if you entered a new trade. And that closed it out there when it entered into that moving average range there. And you would not have entered that last little rise because the CCI was falling off. Now the CCI was declining, so you would have avoided going long during that period until that point there when it starts breaking above the moving averages again. that would have been a nice little small trade, maybe a break even or a small loss, and another one there as well. At the moment, it's broken down on the hourly, so avoid taking long trades until we see the CCI break higher as well. And there is no divergence to talk of. In fact, you may want to consider that a divergence there. Looking at the higher highs on the price versus lower highs on the CCI. That's a bearish divergence, so we're going to see it potentially. Now that's only going to be a very small drop. It may already have hit that 23-38% target level if you draw it to that level there. I like it taking it to the recent low in this case. Next, look at high-grade copper. On the monthly, it's bullish, above the moving averages. On the weekly, it's bearish, it's broken below. And on the daily, it was bearish for some time, and that would have been some opportunity to go short there when that little period was short. But at the moment on the daily, it's broken higher. So you can trade on the intraday based on the daily alone. So if we look at and before I move from here, notice there is lower highs versus higher highs. That was a bearish divergence, and the price fell off, hit our minimum retrace level. In this case, it went down as far as probably around the 50% level. So if we go to the hourly chart, again using the daily as a reference, you can see there we had a bullish divergence to that point. You probably could have taken it to that recent low there. Sometimes you got to wait for it to bounce. Now that would have gone to that level there, and that was the equivalent of that there, and it bounced. In this case, it's gone well beyond 100% retrace level. Now there is no, in fact there is a bearish divergence currently on the hourly chart. You can see there lower highs versus higher highs on the price. So if I was to draw a Fibonacci retracement between that low and that high, then we're looking at a target area between that 23 and 38% level. So I'll leave that in there as a retrace level. And I don't trade these. I look at these as potential retrace area before potentially breaking higher. Now, as long as that CCI keeps falling, we expect the price also to potentially start falling as well at this point. So if you're going long at the moment on high-grade copper, this is an opportunity to take your profits off the table. And lastly, we'll look at iron ore. There is no indicator for the monthly. On the weekly, it's a fresh breakout on the bullish side, although the price is still below its moving averages or broken into the moving averages. And on the daily, it's a breakout in a bullish momentum as well. There is no divergence. Notice it's hit this minor support at minor resistance, support at 749 and resistance at 923.50, and it's about midpoint at the moment. But again, no divergence to talk of on the daily. Moving to the hourly chart, again going long only because of the daily's long, and that would have been an opportune time to go long during this period here, and you would have taken your first set of profits when it hit that moving average range in there. If you went long there, entered again at that point, let it go. The CCI and the price chart moving averages were not entered until this point here, and you would have taken it right near the peak there and taken your profits off the table there. At the moment, the hourly's turned down, so don't go long until you see this break to the upside. But at the moment, as we said, there is no divergence. This bullish divergence played out nicely, and that would have been an opportune time to go long in accordance with this bullish movement on the daily. So combining with the bullish divergence, and you would have gone long at that point there. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.